Morning, Steve here in Chicago with the morning grain comments. Well, happy day before Thanksgiving to everyone. Hope you have safe travels today if you're traveling, especially with this storm that's hitting the Midwest today with heavy winds, especially in the Chicagoland area. Hope you have a nice Thanksgiving dinner tomorrow with friends and family. We are closed tomorrow, and then Friday we have a half a day, so we'll try to squeeze today and anybody that wants to put positions on. Overnight grains are a little bit higher. Equity markets are a little bit higher. The President of the United States came out late yesterday and said they're very close to a deal for phase one of the U.S. trade talks with U.S. and China. China also said, their negotiators said that they're close to finalizing all the details. The issue is just what will China do. Back in May, they agreed to buy $35 billion worth of U.S. ag goods. And then the U.S. Kind of backed away from that. And at the same time, China backed away from that. So, you know, the shopping list is kind of key on how much they buy and when they buy. And then down the road is there also an accelerated phase in which they will buy additional grains. Soybeans, ethanol, corn, wheat, beef, pork, even whey was included in some of that early shopping list. So we'll have to see, number one, if they agree to a deal, number two, when it's going to be signed, and then look at the shopping list. But certainly, I think U.S. farmers would welcome a rally based on this deal. The issue, though, is that the deal may not be any better than what we had in 2017. And the Brazilian soybean prices, the corn prices around the world, whether it's Argentina, Ukraine, wheat prices out of Russia and Europe are all cheaper than U.S. And in February, the Brazil price for soybeans is even cheaper than if you take the tariff off U.S. soybean imports. So we're not really sure as to whether China needs forced to buy it or if they'll continue, especially as end users, to buy the cheapest source. So we also don't know is how anything will be enforced if the Chinese don't meet the agreement. And that's something down the road that if they take off tariffs now, they could put the tariffs back on. So a lot of unknown, but the market is acting positively to this news overnight. A lot of farmer consultants are suggesting that, let's say we get a 50-cent rally in beans and a 20-cent rally in corn, and maybe the same in wheat. They would suggest selling cash on that rally because 2020 still looks like a bearish year with U.S. acres going up, and normal weather suggests that global crops of corn, beans, and wheat will exceed demand. Other than that, we've got this storm moving across the Midwest. It's probably going to slow the completion of the corn harvest. Down in South America, you've got the tale of two countries. Brazil looks like they're going to have normal rains over the next couple of days, and some of the driest areas could see as much as 5 inches of rain. Argentina, though, has a 10-day period in which they're going to be dry and arid. I think that their soils hold moisture that they've had before, and the temperatures aren't going to be hot, so that kind of limits things. But 10 days down the road, Argentina is going to need another rain. So again, a little bit firmer tone. We're watching trade talks. We'll be watching weather. We'll be watching kind of the open interest. Friday we get our first deliveries. We're expecting no deliveries in wheat, and we could see moderate to heavy deliveries in corn, beans, meal, and oil. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and prosperous trading day.